So I think one of the biggest things that people battle with when they first start day trading is the idea of losing money. And then it's also this battle of like, once you start losing money, can you turn it off? So you get into a trade and all of a sudden you're down thousands of dollars, and now all you're thinking about is how you got to get back to green. And this becomes a snowball effect, really just like a emotional, I don't want to say it, but it just basically screws with your overall idea. It just screws with everything. It just ruins you emotionally, it ruins you financially, and everything about losing really just sucks. It's gonna be one of the biggest things for any trader, an expert, a beginner, really any type of trader. The one big enemy that you're always going to have is battling the emotions of being able to accept the idea of losing, and then also being able to accept the idea that every single trade you go into, there's a chance that you could possibly lose. And now over time, you're going to learn ways to minimize those losses. You know, you want to figure out how to maximize the returns and minimize your losses, because at the end of the day, we're day traders. Trading the probabilities, you know, the idea that if we're shorting a stock that's really overextended, there's a much better chance for it to pull down, constantly looking for opportunities that present themselves. There is no 100% strategy, but at the end of the day, there's going to be strategies that are going to allow you to increase the chance of you making money. Because if you're shorting a stock that's really overextended, the chance of it pulling back is going to be 60, 70, 80%. Much better chance for it to pull back and crash back down compared to doing the opposite, where you're maybe buying a stock that's right in the middle. You know, it's 50-50 chance. You don't really know which way it's going to go. You don't really have any kind of idea. And that really just comes with time, effort, experience, and learning more about day trading. But I want to talk about in this video really just the emotional battle. I think I've talked about it before, but we're talking more just, you know, how to accept your losers. How do you stay mindful to the idea that you're in a trade, you lost money, there's still more opportunities to be had, but how do you stop that snowball effect? You know, do you put a maximum loss on the day? Do you just walk away? What do you do? I'm gonna talk about it in this video here in a second, so make sure you stay tuned. Well, what's going on, guys? So I think one of the biggest battles for really any new day trader is being able to accept that every single trade that we take, there's a chance that we lose. And now what I think really messes people up is you get on a hot streak, or maybe you have a couple of days where you're green, and then all of a sudden you have your first red day. You become emotionally attached to the idea of being green, right? Because you have those couple days where you're like green. You're basically telling yourself that you're the master of the market, you can never lose, and then all of a sudden you start losing. And it becomes a snowball effect where the first trade you take isn't that good, you lose money on it, and then you start revenge trading. Maybe you take another trade on the same exact stock, and that happens a lot. It used to happen to me a lot as well, where I would trade a stock, I would lose money on it, and then I would see it start to go, you know, maybe I was buying at like $3, and then I thought the stock was going to go higher. I ended up buying it again, thinking it's going to go higher, and it just keeps on crashing. You know, it's choppy, stuff like that. So you really got to just understand that at the end of the day, what we're doing here is we're not ever going to be 100% unless you're, you know, the master of the stock market, like some of the people on YouTube who are always 100% right all the time. But at the end of the day, most realistic people who are in day trading the stock market, they understand that every single trade that they take, there's also a chance that you're going to lose money. And I talked about the other day, you know, about minimizing that risk. So even if we go into a trade, we at least know we have a good entry. So we know, you know, we're risking maybe 20 cents, risking $200, $300 for the opportunity to make $400, $500, $600. There's a lot of people out there that only trade with certain risk reward numbers. They only do this and do that, and they have a very strict strategy, and that's how they trade. And there's nothing wrong with that, but you got to kind of figure out what works best for you in terms of your emotions. You know, if you take a trade where you enter a trade with 10,000 shares and all of a sudden you're down $1,000 on a 10-cent drop, but the stock is still showing strength, it's still doing what you needed to do, are you going to be able to weather the storm? Now, also you got to ask yourself, if you buy 10,000 shares and all of a sudden you're down $1,000, are you going to be able to sell for a loss? And I think that's one of the big things that you should be focused on when you first start day trading is you basically really need to figure out, how much money are you going to be able to accept as a loss. So if you get into a trade and you have really large size and all of a sudden you're down $500 and mentally you've never had that big of a loss, there's going to be a much better chance of you, I shouldn't say better chance, but there's going to be a higher probability that you're not going to be able to cut off the trade, that you're going to be emotionally attached to that $500 loss, and before you know it, now you're down $800 and then you're down $1,000. And at what point are you going to be able to cut it off? It's also something that I battled in the past where I would be, down $500. I would be emotionally attached to that $500 loss. And I told myself, I'm just going to hold it. I'm going to hold it. I can hold this. And then before you know it, I'm down $1,000. And now I'm taking a $1,000 loss compared to taking a $500 loss. It really comes back to the idea of having a plan, going into a trade, understanding how much money you could possibly lose. And I think you should always kind of be, on the high side. So if you go into a trade, you shouldn't tell yourself, oh, okay, I'm going to risk 3 cents on this trade and I'm going to risk $30 on 1,000 shares because that's my risk here, and I'm going to risk 30 to make 60. And that sounds okay in theory. Let's say you go into a trade mentally and all you're thinking is that worst case scenario, you might lose 3 cents. It might just pull back 3 cents and you'll get out. But a lot of times what happens is it blows through kind of where your stop is, and then all of a sudden you're down 10 cents. So now you're down $100 and you're telling yourself, well, I've got to hold it because there's no way I can take this loss right now, because if I take a loss here, it's going to bounce back. And then before you know it, it just keeps spiraling and spiraling and spiraling. And I think that's also one of the big battles as well, is being able to walk away, having a red day and being able to get up from your computer and walking away. A lot of people always, what they do is they battle, right? They battle the red days. They'll have days where they make $100, $200. I do it. Trust me, I have done this multiple times. This is not a video where I'm like claiming that I don't have these issues. These are problems that I have as well. That's why I'm talking about it in this video. These videos are really a way for me to also kind of talk to myself and think about, Patrick, if I get into a trade, I have 10,000 shares and I'm risking, a couple $1,000s, I better be able to make, a pretty big profit on that. And I also need to be able to tell myself, if the trade doesn't work out, I've got to be able to cut it off. And I think that's one thing that I've battled with, because confidence in myself. And a lot of times you get into a trade and you get out for a loss, and then 5 minutes later, the stock is now higher than where you got out for. And you might have been green, you might have been able to actually make money on that trade. And what happens is, the more and more that this happens or repeats itself, where you keep getting out for a loss and then you walk away and you are now looking at the stock and the stock is higher in price, so you could have gotten out for a green. What happens is, in the future, you're telling yourself, you're like, I'm not getting out on this stock because the last 5 times that this happened, I got out for a loss and the stock bounced back to my entry or possibly higher. And then you start to justify holding your losers longer, because you basically rationalize with yourself, in the past, I got out for a loss and the stock went higher afterwards. So all I need to do is just hold for a longer period. I need to have more patience. And a lot of times, sometimes it does work. I'm not going to lie. There's going to be days where you're going to get lucky. You're going to hold that loser and it's going to go back and you're going to get out for, maybe break even or more. Maybe you profit. But there's also going to be that day where you're going to hold and you're going to hold and you're going to get out for $2,000 or $3,000 loss, and you're going to blow up your account. And I think that's kind of like the emotional human aspect, where the more and more experience, the more and more that you see these patterns happening, you start to then tell yourself, I can hold this loser longer because I've seen this in the past where the stock sold off and then it went higher. So now you're battling not only your emotions, but also that experience where, a lot of times where this happens, where you get out for a loss and then the stock ends up going the way that you want it to go. But it's also kind of tricking your brain, because it's telling you that you should hold. The hardest part about day trading is going to be the emotions and being able to cut off a loser. The numbers work. So if you're correct, 70% of the time, 65% of the time, 51% of the time on profitable trades, you can be a profitable day trader. But the problem here is that as a human being, that percentages and the numbers just don't work as easily as a computer. You know, putting an algorithm into a computer, the computer has no emotion. The computer doesn't care about how much money it's losing, because to the computer, it's just numbers. But for the human, a lot of times what happens is we get emotionally attached to that number. So like I said earlier, if we're down $500, all of a sudden we're emotionally attached to that $500, and we don't want to let go of the trade. All we're thinking about is we just want to get back to green, back to break even. We'll do anything to get back to break even. And before you know it, now you're down $1,000, and that's normally what happens. This snowball effect, where you start out with a decent sized loss, a manageable loss, where you can get out for a manageable amount of money. You know, getting out for a $500 loss, it sounds like a lot of money, but what happens is now you're down $1,000, and it's a lot more money. The more and more money that you lose, the harder it is to grow your account as well, because let's say you lose $1,000, that's taking away a lot of buying power. It's taking away a lot of money, and it's going to make it much harder to gain back that $1,000, because now your buying power is lower, so you can't buy as many shares in the future. It's more of a battle to grow your account faster when you are losing large chunks of money. So really, I think it comes back to the idea emotionally of being able to go into trade and figuring out, you know, what amount of money is too much money for you to lose emotionally. Is it $100? Is it $200? How much money can you emotionally risk to the point that it does not faze you one bit, where you can click sell on a $500 loss and there is not one emotional little light bulb or anything going on? You don't have to battle yourself to cut off that loser. And if you really go into every single trade with that idea, you know, where you go into it and you're like, okay, the stock is $8. I emotionally can handle a $200 loss, so I'm going to buy, you know, 500 shares, and I'm going to risk 20 cents here with the idea that if it does drop lower, I'll be able to get out for a loss because I can emotionally handle that. And over time, you're going to be able to handle larger losses because, you know, it's all relative. If you go from having $100 days to $500 days to $1,000 days where you're making profit, you can also increase your losers along the way as well. So you're taking a larger size, risking, you know, a little bit more money, but the risk to reward is higher because the more money that you're risking, obviously, the more money that you can make. And that's really what you should be focused on. When you first start trading, focus more on not about how much money you could possibly make from the trade, but focus more on how much money you can emotionally handle. How much money can you emotionally handle to lose? I think that's the best way to put it, right? So how much money can you possibly handle emotionally? You know, could I take a $200 loss and walk away and be happy? Fine. Yeah, that's fine. I'll take a $200 loss. I'll risk $200 because I know emotionally I'll be able to cut it off. But if I take larger size and I have a $800 loss, is that going to affect me emotionally and possibly become a larger loss? Is it going to affect my emotion to the point that I'm not able to keep trading? Is it going to affect my emotion where I'm going to be depressed? How is it going to affect my overall outlook on day trading and also, I guess, life? You know, the last thing that you want to do is put yourself in a situation where it's affecting your actual life to the point that you can't be happy with whatever you have going on in your life. If you can't be happy with what's going on in your life because you're taking massive losses day trading, we need to reevaluate this situation. We need to talk. So leave a comment down below, kind of what's your emotional threshold? How much money can you lose before becoming emotionally attached to that amount of money? That's what I'm interested to see. I'm interested to see kind of where people are at. You know, are you emotionally attached to $100, $500, $1,000? How much is it? Leave a comment down below. If you guys haven't already, do me one big favor, hit that subscribe button, and I'll talk to you guys later on.